Hello and welcome to the Tuesday, April 7th meeting of the Finance Committee. Once again, we will be conducting this meeting virtually as we have over the past several weeks due to the ongoing state of emergency. And per that state of emergency, I must read the following statement as I do before every meeting these days. Pursuant to the Governor's order suspending certain provisions of the Open Meeting Law, General Law, Chapter 30A, Paragraph 20, as well as the Select Board's emergency order dated March 16th, 2020, the Finance Committee will be using remote participation for this meeting. The audio of this meeting is being recorded and will be posted to the town's webpage within 24 hours in accordance with the Governor's emergency action requirement of keeping the public informed of actions during this meeting. I would ask that all participants remotely attending this meeting please state your name for identification purposes each time you speak throughout the meeting. At this time, a roll call of attendance will be taken. Okay, so just let me go to my other window here. Okay. So I would say, okay, Mr. Alford.
Present.
Mr. Sparrow.
Here.
Mr. Maxwell.
Mr. Maxwell's here.
Ms. Zemer.
Here.
Ms. Nersessian.
I'm here.
Mr. Murphy.
I'm here.
Okay, now why am I gotta, hold on a second. I'm trying to see why I don't see Vin here. Why don't I see you listed on the, you're not in the Zoom call, are you, Vin? You're on the audio, but not the video, right, Vin? Just want to double check that.
Yes. Can you email me the link? No.
It's the same one as last week.
Okay.
Yeah. Okay, just give me 1 second here, and we'll get started. Obviously, we do not have budget reviews today, and we don't have any administrative matters, meaning reserve fund transfers or the like, to deal with. So what I would like to do, I don't anticipate our meeting going very long tonight. What I wanted to do was first, since we have the chief here, talk about any updates you have, Chief, on the financial situation relative to what's been spent to date or upcoming spending for the coronavirus emergency.
Absolutely. So currently, either purchased or obligated approximately $6,500 for personal protective equipment, $571 for technology. That was already disclosed in the previous week. And right now, the schools are up to just shy of $50,000 between their original technology purchase and then the ongoing payroll and food expenses, food insecurity for our community.
Okay. Okay.
How much? It was 50,000. You said this is Sue.
Yeah, they're at 47,218 right now.
Okay. So I didn't add it all up, but we have, so it's basically, it sounds like it's about a little over 50 grand so far.
Yeah, closer to 54,000.
Okay.
Sorry, Sue. Can I ask a quick question?
Yes, you may.
Okay, so sorry, Chief. So 6,500 for the PPE, and then there was an additional 7,500 for tech, and then an additional 47,218 for the schools.
It was 571 for technology. That has not changed from what I told the committee last week.
Sorry. Okay,
That's
sorry about that. I wrote down the number. Yeah, wrong. Okay. And so it looks like this, the difference between the PPE of last week was 2,500 to this week is 6,500. So that moved up. And then the schools were at, it looks like 39,000 last week, and now we're at 47,200. So, okay, perfect. Thank you.
Absolutely.
Okay. Anything else you want to?
Ben, can I ask a question?
Yes, go right ahead, Mr. Sparrow.
Thank you, Chief, for the update. Is the 6,500 for PPEs, is that enough, or do you think there's going to be more purchases in the near future for that?
I do not anticipate significant additional purchases for PPE. The additional expenses will likely come for additional cleaning supplies and or cleaning services. But we're in good stock between what we have in inventory plus what is currently shipping. So I'm feeling very comfortable that the first responders have the required equipment that they need to be able to weather the surge that's coming in the next 10 days or so.
That's great. Thank you.
Absolutely.
Okay, any other questions for the chief?
I have one other question. This is Sue.
Go ahead.
Chief, have the calls that you've had to respond to been at a level pace as to sort of what's the norm? And I don't know if there is a norm, or has that escalated because of the virus?
So that's a multi-layered question. Our average number of calls per day is usually between 3 and 4. Most of our calls have actually dropped off slightly from that. I think a lot of people would rather not call 911 and ask to go to the hospital right now if they don't have to, which has been good. We have seen a slight uptick in calls with patients reporting some combination of fever, difficulty breathing, or other flu-like symptoms, but we haven't seen a surge yet in terms of our run volume.
Okay, thank you.
Okay, Chief, just one question that I have on the logistics is, what happens when somebody calls with a call like that, says they have fever? What is our testing protocol? Do these people get tested, or are they just presumed positive and you just say stay at home?
So the DPH has issued guidance which allows us to sort of walk through a decision-making tree with the family, and for a lot of folks, they will come to the realization that it is probably safer for them to try and ride it out at home with their symptoms than it is to be transported. And so we will likely see additional refusal no transports. We already do a lot of those on a regular basis, but there is a procedure by which we will have the ability to really emphasize to somebody, I realize you're miserable, I realize you're in a lot of pain, I realize you're not really feeling well, but based on your symptoms, it's probably best managed at the house as opposed to going to the hospital and either potentially getting worse or having a negative outcome. Obviously, if someone's in extreme difficulty breathing, we're going to be transporting them. But if they're just complaining of basic flu-like symptoms and they are mild in their symptoms, we're going to encourage them to try and ride it out at home.
So, Ken, this is Dan.
Yeah, go ahead, Dan.
Sorry. So I've been reading some about these things, and there actually has been an increase in the no transports just nationwide as part of this. And what I'm wondering is especially now that the ambulance revenue is part of our sort of table, not we don't have the separate fund.
It's part of our local revenue. Yeah.
Yeah. If you think that. It might be better to sort of see if any, and I know that the receipt of money is well delayed, but you do see it seems that maybe we should take a look at our revenue projections and just make sure that we're not creating a hole for ourselves, down the line.
Yeah, it's a good question. I don't anticipate a lot of our patients are not going to be transported. I think a lot of people are self-selecting and not even calling us to begin with. We haven't really seen a lot of people who, after we have this conversation, still said, yeah, I'll stay home. Most people are still choosing to be transported, or their condition warrants being transported. And Ken, back to your original question, we don't have the ability to test in the field, but based on the presentation of symptoms, all of our personnel will wear proper PPE as if the person had a positive COVID test. And we may not know for a week or more if they actually have COVID.
Well, the particular question I was asking, Chief, was more towards the record keeping and data part of it, right? Obviously, you give updates to the select board, and you have posted the number of cases in Holliston and so forth. But what I'm wondering is, like, hypothetically, let's say I were to call you and say, hey, I'm fever and I've got flu-like symptoms or whatever, and you say to me, look, if it's mild enough, don't go to the hospital. We're not going to transport you. But if you say to me, stay home, and then I stay home for 2 weeks, let's say, and then I recover, right? That doesn't go down from what you're saying. That doesn't go down as a verified case, even if I had it. So I'm saying, how accurate is our case count if we're telling people to stay at home and we're not testing them to see if they've got it?
Because they still have the ability to reach out to their primary care physician and get an appointment for testing, which can happen independently of us or the hospital.
Okay. That's what I was saying. I was more concerned that, do we have higher numbers than we're reporting because we're not tracking those people that are staying home. But if, to your point, if they're getting it tested through another means, I just, again, it's not trying to be alarmist. It's just trying to make sure the data is accurate, right? So.
Right. No, we are convinced that there are more cases in the community than the testing would reveal, and that's because a lot of people have only mild symptoms, and testing has been so delayed and difficult to get that I would suspect that there are more people that have the infection in our community right now than our current statistics would suggest.
Yeah. Okay.
So Ken, this is Dan again. Just an article I read, and it's Wall Street Journal, some of them are much bigger, cities and stuff, but they're getting calls, and patients are actually getting treatment sort of in the field but not being transported. So there's no sort of transport in their ability to sort of charge, but they're still rolling a truck and paying the EMTs for it. It's not necessarily for COVID related calls either. It's separate from that.
So part of our fee structure actually does allow us to do billing for treatment but no transport. So an example would be perhaps a diabetic patient who has very, very low blood sugar. We go out there, we raise their blood sugar, at which point they are then about their wits, and they say, I don't want to go to the hospital, and they sign a refusal. We have the ability to bill them for the interventions, even though we didn't do the transport. So in the same way, if we went and someone had was complaining of difficulty breathing, then and we perhaps gave them a breathing treatment, then we would have the ability to bill them for the interventions, even if we didn't do the transport.
Okay, so it must work differently in different states, because this article anyway was saying that they weren't necessarily collecting revenue on that. So that answers my question.
Okay. Any other questions for the chief?
I have one.
Yep,
this
go
is
ahead.
Mr. Maxwell. Chief, when you transport these patients, is it typically a BLS or an ALS intercept?
So we've done some of both. We've had some that their condition was such that it was a BLS transport. There have been others that were bad enough that they required an ALS transport, especially for the difficulty breathing aspect of it. And the thing is, once we transport somebody who's in this sort of condition with this heightened concern and we're pretty much presuming everyone who is exhibiting flu-like symptoms to have it, even though we don't necessarily know that for certain, when we get back to the station, it adds about another 45 minutes to an hour of decontaminating the truck so that it's clean and ready for the next call, which is a lot deeper clean than we normally get after just a regular transport.
Does that deeper cleaning add to the cost of the run?
There's no way for us to pass that on, so unfortunately, no.
Okay. Do you anticipate that we would need additional funds to cover the cost of the ALS intercepts?
Not based on the projections that I'm seeing and based on our normal ALS utilization. I would say that there may be a slight uptick in ALS, but if we transport with ALS on board, we're also getting ALS revenue because we have the ability to bill at the ALS rate. So there will be an offset to the charge for them being on board.
Wonderful. Thank you very much, Chief.
Of course.
Okay. Anybody else? Okay. Thank you very much, Chief, for that update.
My pleasure.
Obviously, keep us posted as we move forward.
Will do.
Okay. Okay. So now I will just point out that I had two items on here on the agenda. One for discussing the warrant, which I will postpone for this week because there is not a new draft. We did not receive a new draft yet. The Select Board hasn't taken action relative to what we discussed last week, so we don't have to discuss that tonight. But I do want to get into the key discussion for tonight, which is the model I sent out last week, and let's start having a discussion. Now, I'll preface this by saying a couple of things, okay? my intent is not to decide tonight what our FY21 budget will be. It's more to start the discussion about two things. Whether we, based on the limited data we have, and it's very limited, I can tell you that right now. I have some new information I got an hour ago that I'll share with the committee in a moment. But to discuss kind of our model parameters and say, where do we want to be? What do we think a good starting point is? And then more, let's focus on what the plan forward is going to be, because I think that realistically, and obviously you guys can render your opinions momentarily, realistically, we're very early in the financial aspect of this process, right? We know unemployment has spiked, we know the economy's been shut down, all those things, but that impact is not really being seen in a major way by the town yet. We'll see come May 1st when tax bills are due, those kinds of things. So I want to kind of just have the discussion around the model. We'll obviously refine it as we get some data. But let's start talking. What I really want to talk about is, okay, if we can settle on where we think a model, what we all believe is a decent or a good first guess model, then let's talk about where that puts us and what our contingency plans would be. We are going to have more time because the town meeting's been delayed, which is why I said we don't need to decide tonight what our budget recommendation has to be. But so I would say to everybody on the call, the FinCom members, pull up the spreadsheet I sent out last Tuesday, and let's start talking about it. Okay. Now, the new information that I wanted to share was that that really it's confirming what I just said. We had we have a meeting that we usually had kind of once a month, but we've been having it weekly with Mr. Cronin, myself, Mary, Sharon, Kathy Pierce, Jeff, and sometimes Keith. Keith doesn't always make it, but it's really just a discussion on how things look from the financial perspective. So each of the representatives there can share with their board what these kinds of things are. And in the discussion tonight, we talked about, have we seen an impact to local revenue? And the answer is no. According to Sharon, we haven't seen anything yet. In fact, she said that our excise tax collections were actually above our model for FY20. So in that sense, we're not seeing an impact to FY20. Obviously, FY21 will be a totally different story. But Mary confirmed that as of now, she's seeing some inquiries about possible delays in payments for things, but at this point in time, the town has not seen an impact from the virus yet. Which again, it's very early. We know there's going to be one. It's just that we're still too early in it to see anything. So before you ask, what are we seeing so far? The answer is nothing. And in fact, Kathy said that there is still a lot of ongoing construction activity in town, because even with the stay-at-home order, construction is considered essential for whatever reason. And maybe it's because you can social distance when you're doing home construction or something. So there has, from her perspective, in talking to the building inspector, she was saying that she's not seeing any slowdown in the building activity. Obviously, we know that's going to change over the coming months, but at the moment, there's no visible sign of a virus impact yet. So just to give you that background. So, okay. So pull up the spreadsheet, and I'm going to do that myself right now.
Ken?
Yes.
It's Sue Nersessian again. I'm just wondering, I know that there have been a lot of organizations that have either frozen salaries or many that are actually asking people to take pay cuts, which I'm not a big fan of. But do you know if that has been discussed at all? Not the pay cuts, but freezing salaries for this next upcoming year?
I have not, to my knowledge, the Select Board has not taken up. There are a couple of questions I think the Select Board will be taking up in the coming weeks. One of them will be something akin to that. The other, I think, will be also concerning employees, like whether we need to furlough employees, whether we need, because while we do have the majority of staff working from home, in fact, we may have everybody working from, let me rephrase that. Town Hall is closed. So, for example, everybody at Town Hall is either working from home or not working, right? But as of right now, my understanding is that everybody's still getting paid, right? If there's a plan for people who are home but not working, or if the town's demands and on the town government are reduced because of this, then yes, I would expect the select board will have some discussion on it. To date, they haven't had that discussion, and I don't think I would expect that, as I said, we're going to hear about that during the month of April.
Okay, thank you.
So, okay, so is everybody pulling up the spreadsheet? Now you look at, let me make sure I have the right thing here, because I had one version that, this doesn't look like the one that I, oh yeah, this is the wrong one. Okay, so let me just make sure I have the right one, because the one I'm looking at looks wrong.
You want it from the email that starts, ignore the last spreadsheet I sent out?
Yeah, I think I pulled up the one from the spreadsheet I wanted to ignore. That's why.
Is the one that says new model 331?
Yeah, it's from the 31st, but I sent out two, and one of them was wrong. So let me just go back and check. That's the one Sue is referring to that said, ignore the one I sent out. Where the heck is the second one? Oh, I should just look here. Hold on. Oh, there it is. Okay, I found it. Yeah, I sent it. I sent it at 3:29 p.m. last Tuesday. So if you have that one, that's the right one. That's the right one to look at. Okay, and you'll know it because the first one I sent out had a surplus. The second one I sent out had a deficit because of the math error, because of my error. So now if you're looking at that, right, there are a couple of things I'd point out. Okay. I explained the assumptions in the email. The couple of the key assumptions were that I sucked back into the model some of the knowledge we have now, like the updated debt numbers, the updated benefits costs, things like that, which were beneficial actually, right? They were better than we modeled. So I sucked those back in the model. I assumed a local aid cut of 5%. I assumed a local revenue cut, a local receipts cut of 10%, right? So that was my starting point. So, and I left new growth at 325. I did talk to Kathy, and based on her, again, she literally said she has absolutely no clue, but given that construction is continuing, she doesn't expect it to be a crater. If you recall, when we hit the bottom in 2008 from the real estate market crash, new growth went down to 280 something was the low mark. So I said to her today, we're operating with the 325 because, from my initial thinking, we'll see a cratering in real estate, but not. The last recession was caused by the cratering in real estate. In this particular case, it's caused by a virus. So she's saying real estate activity has slowed, but prices are still up. That's what she told me. So in that backdrop, I expect new growth to crater, but not to the $280,000 level. So that's why I think that from that perspective, leaving it at 325 is probably good. We could take it down if there's consensus to do that. But let me just open the floor and say, okay, does anybody want to discuss the assumptions I made?
So this is Dan.
Mm-hmm.
So the first thing I noticed is that the number you put in for the schools does not include it's just the sort of the open the doors number.
What I did was I took their. Yeah, go ahead. Good.
I'm just saying it doesn't include the 80-some-odd thousand that they requested for those other two.
Correct.
Not that we're not looking at that or not, but I think it might be worth it just to sort of put that in there, just so we see that the deficit is really closer to 300,000 when you kind of look at it in totality.
Okay.
We usually put in the request in this column rather than the sort of.
Well, keep in mind there's the model and then there's the request. I left the request as is, right? All I did was refined our model.
Okay, well then change the request to what it is, the updated request.
Oh yeah, well that obviously when I sent this out last week they hadn't updated the request yet. So yeah, okay.
Right.
I'm going to just to tell everybody what I'll do. We'll have this discussion. I'll write down everything it needs to change, and I'll put the changes in and then send out an updated spreadsheet after the meeting. So I'm just going to, because I don't want to do it real time and screw it up. So
and I forget. I know I looked it up. What was the cut to local from state aid in 2010, right, for the fiscal year 2010. It was more than 5%, wasn't it?
I believe it was, yes. I was going to go look that up, but I haven't had a chance to yet.
But the thing I would say is, I mean, we had no idea, but the difference here versus then was, people were still going to restaurants, people were still going out, spending money. They were able to, and then in addition to sort of the layoffs, all the sort of projections also were that under the unemployment rate, I think we peaked at about 10%, 809.
Mm-hmm.
It took slower to get there and slower to get back, but if you take the 10 million sort of jobs lost in the two last job reports, plus we're probably over that already, maybe 13%. And so the state is losing money from income. They're losing money from restaurants and sales tax. I don't know how, but I don't know exactly what their situation is with other levers that they have to pull, sort of their stabilization funds, if you will, or their rainy day fund.
Yeah. Well, I will tell you. I will tell you if they're gonna do that, they'll do that to keep FY20 whole before they plug FY21, right?
Right. I just don't know how big it is and how long it can last in theory.
So what would you suggest?
Well, I don't know. I mean, I would think that a cut of 10% is probably, it feels more realistic to me. But I'm not basing that on any sort of real knowledge, other than to sort of say that if you've got 2 to 3 months of reduced economic activity, significantly reduced economic activity, and an unemployment rate that increases by 10%. Granted, it's maybe you're not running that for the whole year, but it just sort of feels like revenue at the state should be down at least 10%.
Okay.
That's kind of my thinking, but again, it's not based on any sort of
Right. Well, at this point, we don't have the data to support anything, right? We just have the look back at history, which really doesn't cover a pandemic.
Every 5% cut is about $500,000, right?
Yeah, I mean, you can look at the number right in the spreadsheet. Right.
This year is 10.4, so.
Right. It's just to make sure you understand what I meant by 5%. I did a 5% net cut, so I took state aid minus the offsets and charges, and then cut that 5%, and then just left the offsets and charges the same way. Just cut the top line state aid number.
But either way, I mean.
Right. It doesn't matter how you do it. I'm just saying that it's 5% off. It's not 5% off just the state aid number, because they're the offsets and charges. That's all I'm saying.
Right, and that's why the decline is 5.3% on just the state aid, because you make it up in the offsets and charges.
Exactly.
But regardless, it's about $500,000 for every 5%.
Yes.
Or $100,000 share extent, or however you want to look at it.
Right.
It just would strike me as being. Somehow I don't feel like how we would possibly get through what we're going on here with just a $200,000, $300,000 sort of deficit. I mean, I could be wrong, and I'm also just trying to figure out, like with the ambulance, how else we may find ourselves. What other sort of areas may we, find ourselves having issues, and one of them we brought up in our liaison meeting with the school department is, cut to the social student services, but it does seem like that's delayed a year, probably, or the impact would be delayed a year.
Okay.
So I don't know. But my only thing is that I think the state aid is probably too high, and local receipts. I mean, it's a smaller number, so it's kind of.
So let me ask a question of the general committee. What is the consensus? Should I take the model down further for local aid? We'll talk about local receipts in a second, Dan. But for local aid, let's say, is everybody? Do we think 5%? And again, the point of this exercise is to get a handle on where we think we might be headed and not to make decisions tonight as to how we deal with that, right?
Right. So here's my thinking and how I think maybe we should try to approach this. And who knows when we're going to be able to actually hold the town meeting when everything is going to sort of get finalized anyway.
Mm-hmm.
But would be to be very conservative now, and I realize that may result in us having to recommend that hours are cut and things like that. I wouldn't think that we would need furloughs, but that then we re-examine everything, come fall town meeting, and adjust accordingly as we can. So if it's a reduction across the board in hours by 10% or whatever, right? Maybe come fall we say, things are sort of better, and we should be able to go back to full hours.
Right. Well, the other thing we have to consider, and again, this is why I think we have to wait and see, is we do have stabilization fund for this. This is kind of not that I want to ignore the crisis, but I'm saying, like, if we look at a scenario where we say the cuts would be draconian. I will just make one point on that, which is one thing we did discuss tonight, was what the status of our stabilization fund was. And really we have, in the best case, we have about $2 million to play with. And I don't mean play with like we should spend $2 million. I'm saying of the $10 million we have in stabilization, $8 million is invested and $2 million is in cash. So obviously to the extent we definitely don't want to touch the invested piece at this point, right? So.
What's it invested in?
I don't know. I'd have to ask Mary what she puts that in. Whether it's in something the equivalent of PRIT.
I think it's got to be I think I wouldn't think it's cash. She shouldn't be investing it in the market.
No. I don't think it's. I think it's in a. When you say the market, I think you have to be careful, right? The $2 million is in a money market. Okay. The other $8 million is, I think, in market-based funds. They're not investing in equities or anything like that, but I think that that's why I said I wouldn't be surprised if it's a more conservative equivalent of something like PRIT, where it's a state fund that invests in certain more conservative instruments.
It shouldn't be.
Find out?
It shouldn't be you should find out, but it shouldn't be invested in anything more than short-term treasury. Because anything, even a sort of a short-dated, maturity treasury type fund, unless it's the ultra short. The 2-3 year duration. Is expose us to interest rate moves and things like that. Now, granted, recently that would help, but
I'll find out.
It's urgency money. It just shouldn't be invested in anything that really is going to change in price.
No, I understand, and so let me find out I'll find out tomorrow from her where it is. But she just mentioned, she said there's about $2 million in a money market fund that we could that would be obviously very liquid, right? So.
Well, let me ask you this on a sort of your opinion of stabilization. When would you ever recommend using $5 million from stabilization?
Never.
Stabilization.
I would never do that. No, I'm thinking if I'm thinking dipping into stabilization, what I'm thinking is if we see the temporary dislocation, like something like this where we say, okay, eventually, after some time period, this virus will wash out, so to speak. There will be lasting effects, but the most severe effects will diminish over time. And we were looking at a deficit that would create a very dire situation for the town in one or more areas, right? Then I'd say we can take some stabilization money to bridge that gap. But to me, my personal feeling is, well, we're using that when there is a defined light at the end of the tunnel because of the implication of using it for things like operating budgets, right? It's there for the emergencies. So I'm not saying we don't use it in an emergency, and certainly we're in a state of emergency now. But I don't think you sit there and say, okay, well, we're going to use stabilization to pay, raises so that everything looks like it did in FY21 before this virus hit, things like that. But if you sit there and say, okay,
so that was my next question.
Yeah.
Well, can you use it to save jobs? That's one question I had. Sorry, this is Sue.
Well,
can you use it to, instead of having to let someone go, can we use it to keep them working so that we have, we don't have to.
Well, that's a decision.
We don't have to reduce.
That's a decision for us to make as a committee, right? Do we recommend using the stabilization fund to prevent that situation, right?
Okay, it was more the question, is it available for that?
Yes, we can use it
rather
for
than-
anything we want,
Okay.
right? We can use it for anything
Okay.
we want. Yeah.
Yeah, this is Michelle.
It-
Yeah, I can see using it to save a job, but not to give an increase in pay for that job.
Right, that's my point, right? I want to be very clear. I'm not suggesting that we sit there and say, okay, we have an FY21 blueprint and, oh, something disastrous happened. Oh, let's just pull stabilization to do it, right? It's to bridge, as I said, from my perspective, it's to cover, I hesitate to use the word catastrophic, but that's really what I'm meaning. Like, if you sit there and say, okay, we're going to have to cut, huge staffing and we're going to have giant holes because of the, okay, but this, rather than saying we're going to fire a bunch of people, then have to hire them a year from now or something, or hire most of them back when things smooth out, you say, okay, can we save some jobs and move forward? But it's not to sit there and say, okay, well, we if the virus hadn't happened, people would be getting a 2% raise or whatever, so let's give everybody 2%. No, that's not it at all, right? You take the money out of the budget, you use every tool at our disposal to reduce spending, to keep the town's services operating at a level that we need them to operate at. If, in spite of all our efforts, we don't have the funds to do that, then we can look at, do we take some stabilization money to ensure that the town stays functioning at the level that we need it to function? That's the way I look at it.
And Ken, this is Dan again. Last year, we went into town meeting with a very slim surplus
Yep.
on the bottom line, because we were pretty confident with all the sort of the projections that we had.
Yep.
Obviously, with the less than certain projections, where do you think we should? I mean, I have a number in my mind where I would like the surplus to sort of be at the bottom of the spreadsheet. Be even after using stabilization and whatnot, to safeguard us. And where do you think? So what I'm trying to say is we right now have called a $300,000 gap, right?
Yeah.
Or 200 to 300,000.
Well, it depends, right? If you go to minus 10%, then it's about 800,000, right? So.
And it's about 800,000. In my mind, it's actually a much larger gap than that, because I think we want to leave a pretty big number at the bottom there to account for things like maybe greater local receipts, greater reduction in local receipts than we could have accounted for.
Yes, and that is part two of this, right? Which is you're absolutely right. In good economic times, as a committee, we are more comfortable with a smaller buffer. We always leave a buffer. We're small, when the economy is looking good, we've left a smaller buffer. I completely agree that in this climate, we have to leave a bigger. We've always done that when times got tough, and we're going to need to do that again. Again, just for anybody who's listening at home or listening on the call, whatever, the reason for that is very simple, which is cuts coming later in the year are much more devastating than cuts prior to the year. And the simple reason is, if somebody's getting paid and you've already paid them half their salary, and then you have a sudden drop in revenue, you then have to make that up over half a year when you've already paid out half the year's expenses, right? So I absolutely agree we want to leave a bigger bottom line this year. And there are a couple of reasons beyond that too, which is from the taxpayer perspective, to the extent that we're accurate, leaving a slightly bigger bottom line lessens the tax impact to the town, which is important at a time like this.
Right. So what would you think would be, basically you're the only one on the committee that was here in 08, 09, and going through that whole process. What would you think would be a sort of a reasonable level in your opinion? And obviously then we can all talk about it, but I'm just trying to find a sort of a starting point.
Well, I mean, just for to tell you, for next week I can go look at the data, because I still have the data from back then, right?
Yep.
But I will tell you that we routinely left typically 200,000 or more on the bottom line during those years.
Or just a regular year.
Yeah. So it was up closer. We were targeting up closer to 3 or 350 during the down years. And again, I don't quote me on that yet until I check the numbers. But
I was thinking 500,000.
Yeah.
Maybe it doesn't need that draconian.
Well, in this environment, I think it's going to depend on how soon we get data. That's the way. I mean, I agree. It's going to be a large number, but I think that it also depends on when we get data, how we roll into 21. But we'll talk about that in a little bit. So
let me just say,
yeah, go ahead.
If it's 300, let's just say it's 300. I think it may be more, but I don't want to say data, but let's just assume it's 300. And we're sitting at negative 300 now. That's really negative 600. If you think that maybe, actually down 10%. Now you're at 1.1 million that we're in the hole.
Right.
So my gut is that today we should send sort of let people sort of know what we're thinking, and by adjusting our wage table recommendation from what was it 1% or 1.5% to
It was
0
1%.
for now, 1% to 0 now, with a caveat that could go lower if necessary, and I don't know if it would go lower, but we could look at reduction in hours, and also that we will reassess all of this come October, so that if we make adjustments and I say things aren't as bad as we think, and come October that things are actually kind of looking okay, we reinstitute those, and yes, it's not would not be ideal, but that's sort of 4 months of the 4 months of the fiscal year, and then that are lost, but that are then made up for the last 8 months. Anyway, not made up. I'm not trying to say that we get 1% for the entire year, but just that you do get that 1% that's for 8 months of the year.
Yeah, and that's actually, I think, a very important thing to communicate, right? I think that we can. I don't think there's any difficulty with that at all in terms of saying, at this point, I think it's today as we sit in April without any knowledge of where this is going. I think that the general approach I would be in favor of is exactly that, which is we budget very conservatively with the opportunity to hopefully by October, if this thing has kind of washed through at some level, even if it hasn't, by October we'll have a much, much clearer picture, right? So I'm very much in favor of saying we tighten our belts as much as we can now, and we can always revisit things in October when, and that's kind of what we were saying last week about the warrant, when we said we should look at that from the warrant perspective too, for all these warrant articles. If there's nothing that's essential to be done now, let me be clear on that, right? Essential doesn't mean it only pertains to the virus. What I'm saying is if there are things that are not planned or could be deferred for several months without any real impact, then we should be doing that. Our warrant should be very, very tight for June because of that.
I mean, I personally think that none of those warrant articles weren't going forward, except for I think maybe the radio tower one where there's a public safety issue, and unfortunately that's like the largest. But I kind of it sounds like that's something that really does need to be taken care of. Now I know this is kind of like a third rail of everything recently, and I know, but I'm going to go back to those salary raises that occurred last year for the department managers, and strongly recommend that the select board go back and figure out a way of getting those so they're flat year over year. I don't think that's we go in to tell every non-manager they're getting 0%, and then the managers do. I know it's sort of the same pay rate, but the annual income is still higher, and the payouts from the town are still higher.
Right. I think that's already factored in, though. I think we already told them that, and they've done that, which is they've said that the salaries are going to stay the same. The only difference from FY20 to 21 versus 20 is that it's a full year run rate versus FY20, which was partial year. But I think that the rates stayed the same in the calculations.
No, I understand that, but
okay.
Going back to my point where the year over year dollars should be the same.
Okay. Sue, you had something to say?
Yeah. So I'm absolutely in line with going from a conservative perspective. I'm in line with revisiting in the fall. I'm in line with everything that Dan said around the warrant articles as well. The one question I did have, though, was how is it dealt with all of the collective bargaining agreements and trying to keep those salaries flat? Well, how does that
one thing
work, and how do how can we?
I was just going to. Sorry, did you have more to say? I didn't want to interrupt you. I thought you were asking me a question, so I was going to answer it.
I was just going to elaborate on the question, so go ahead. I'm fine.
Okay.
You understood it?
Yes. The answer is this, right? The contracts are all in negotiation, right, with all our major unions. The gist of it, of what happens if there is not a contract. Now, again, I'm not saying anything about the state of any of these contracts. I'm just giving you the hypothetical of what happens if we go into FY21 without contracts, right? In that case, what automatically happens is they're extended at the FY20 levels, okay? So basically it's 0% COLA is what happens. So if we were to go into FY21 with all these contracts still up in the air, the working assumption would be the salaries stay exactly the same as they were in FY20.
But except
Okay,
Ken, that
so
they would that people on steps would step.
Correct, right. You just presume that the contract is still in force for FY20, but there's no COLA. That's the thing. So Dan is correct. If people went up a step, they'd go up a step.
Okay.
So
And none of those contracts are currently signed, correct?
that is correct. My understanding, again, I'm not negotiating them, but my understanding is that they have not yet been signed. So, and some of this, I'll give you some clarity on some of this in our executive session, but none of it's been signed. Okay?
But I also think that if we lowered our recommendation for salary increases for the wage table to 0 today, I think that would send a signal.
Mm-hmm.
I'm not
Okay.
sure.
Yeah, I already noted that. I'll do a, in fact, I think I did that in the, no, I did 0 budget. I didn't do 0 salary. But it doesn't really matter because the way it was doing it, it was just bottom line. So indirectly, that's factored already. That's factored in.
If we do 0 budget but not 0 salary, that's just going to cause a whole bunch of problems.
No, I agree. I'm just saying that from the model perspective, because I zeroed it out, I didn't make any specific change to the salary because I didn't need to, because by saying 0%, it just flat, in other words, the only reason you put in the salary difference is when you're growing the budget and you want to see the impact of salary. But the way the spreadsheet works, it picks the lower number, right? So by me putting in 0% for the guideline for the overall budget, it doesn't matter what I put in for salary. It's going to just default to 0.
So in the spreadsheet, the negative 199071,
Yeah.
you've already zeroed the budgets?
Yeah, if you look up above, right, what you should see is that every budget is the same as what it was in FY20 in the model,
So
in the
right now-
guideline, in the model guideline
So right
column.
now, we've been receiving budgets at 1.5%, right?
1%.
1%.
Right, and
So
this is
that is
Michelle.
actually. So
That-
that's already. So
That's the requested column, Dan. So look at the requested column. Now keep in mind that the requested column will go down a little because of the updated school number, right? But that's, if you go 3 columns over from the guideline model, you'll see what the deficit is when you add in all those other dollars.
Right, and
Yeah.
this is Michelle. But when you do that, it's going to decrease hours because people are still going to have their steps.
Well, in theory, yes.
Unless they're at the top. Right?
But we can't take people off the steps. I mean, that just like
Correct.
Right. I mean, but it's a function because you're going to use that year's wage table, right?
Yes.
It's not going to change the wage table.
Right. So you're correct. There will be steps. There will be steps that get built in there. But if it's a 0, so again, if it's a 0 bottom line, that means they have to cut somewhere else, right?
Right.
The issue is there are some increases in here that are things that we need to do. I think so. We're not. I think that. So I put in the school sort of requests are about there, and we're about negative 500,000 on requests for the requests and the sort of the updated school request of approximately the exact number in front of me, and so I mean so that's really kind of where we are today, and I think when you go to 1% budget, that's about $80,000 more. But realistically, we're kind of maybe at $400,000 hole based upon requests for increases in certain things. And then we've got, and let's put it this way, I mean, there are many different groups in town that have requests for more, right? Mm-hmm. And what I don't want to do is give one group in town more of what they get while giving no other groups in town any.
No, that's correct.
So really, we're at a negative $400,000 deficit right now, assuming a 5% state aid.
Yep.
And
a 10% local aid cut.
The
Yeah.
state state aid and the 10% cut, and then if we you get to 900,000 if you assume a 10% cut plus a 300,000. So you're one. So in some ways, I kind of view that we've got $1.2 million that we may need to cut, depending on obviously what other people's views are. But between 800 and 1.2 million to cut.
Potentially, yes.
From stabilization, or make up some stabilization.
Yeah, well, I would tell you that I'd be very. We'd have to have a discussion about a number that high from stabilization, right?
I agree. My point is, I don't think that there is. I just want to be clear to anyone listening that there's very, a real issue here, and that there are going to be some significant cuts.
Yeah, we're gonna have to make decisions.
Or really that there won't be money available for any kind of significant increases. Not just budgets, not just of salary, but just budgets in general.
Yeah, no. I think that's, at this point in time, I think that we're all in universal agreement that we can't move forward with budget increases in this current scenario.
Hi, can I ask a question?
Go ahead.
This is Ben.
Yep, go ahead, Ben.
So, as we go through this exercise, I thought we were just going to look at the assumptions, but I mean, if we're going to talk a little bit deeper, so one of the levers that, as I'm looking at the model, I plugged in the school's number that they sent over the other day just to kind of see what it looks like, and got a bottom line of about 500,000 in deficit, give or take. I mean, we still have some other conversations to have, but I think one of the big things that stabilization, I think, is important to talk about, which we have, which I'm glad. But the other thing I think we need to talk about is capital. We've currently got $2 million in capital requested in our budget, and we have we have some money in our capital expenditure fund currently. I'm not saying spend a dime. I'm not saying do anything there, but I'm saying that's a lever we need to look at and examine as well in this exercise. I mean, I don't know if we want to go down that road, because I thought we were just going to look at the assumptions, but I did want to throw that out there if we're going to start talking about some of the stuff up top.
So Ben, this is Dan. I just wanted to say that I don't disagree that we should look at it. I will say that since I joined the committee in 2012, so just a couple years sort of after everything was going on, we have worked incredibly diligently to get back to that $2 million number, and I think that we've still underinvested in the capital of the town. So I would be, really hesitant to cut that by more than, a very sort of nominal. I mean, a couple $100,000. I don't want to say, hey, okay, we've got 200,000 in capital. Let's go do $1 million in capital to plug that whole hole and give everyone pieces.
I'm not saying that. That's not what I'm saying.
No. But
I'm just basically.
I'm not suggesting you were. I apologize. I'm not suggesting that's what you were saying, but I'm just sort of saying that it's certainly an area to look for to maybe reduce the need to pull from stabilization for some amount. But we still want to replace police cars. We still want to there's still a lot of stuff.
And I mean. Right, and I'm not trying to make this out to be a sort of a conversation about the investment of things and such. I'm kind of pointing out, being, if we're going to talk about, pulling warrant articles, that's $250,000 in the model, and we're going to talk about. I just think we need to have conversations about some of these things because, for example, we do have some money in our capital expenditure funds. What is it there for? Is it something that, I mean, we certainly had the conversation, part of the thing that was discussed in the, when S&P was looking at our bond rating, is that we had a lot already appropriated when we put it in the capital expenditure fund. Maybe we moved some of that money into stabilization. I don't know. I want to throw out there that there is, I think we need to have some kind of a discussion about that. And the other, elephant in the room with respect to this is water treatment plant. What does that look like? Because that's sort of on the table, and we have to be careful with that because it is something that needs to be thought about, and it's probably going to start coming up sometime in FY21.
Yeah, but that has no impact on this model. That has zero impact on the model.
I know it doesn't.
Yeah.
it has no impact on the model. I get it.
Yeah.
But it's also, but if we're going to have a debt override, if we're going to do anything like that, I think we need to start thinking about some of those kinds of things just in a general term. And I realize it's not related, it's not germane to the model. I get it. But
No. So I guess I just want to understand how you're envisioning the treatment plant factoring into what we're talking about. That's what I'm trying to understand.
Well, I mean, I guess I think about it in terms of, like, if we do think about what we want to do with capital, if we want to do anything there, there's some of that money allocated or earmarked for that particular purpose, and that's fine if it is, and then I take it off the table. I don't know.
I see. Okay.
That's kind of how I'm thinking. I think I don't want us to necessarily, if we want to take it off the table and we want to move on, that's fine. But I think we need to start looking at sort of everything that's out there. What do we have here? What are we looking at? Because I think, these are kind of extreme times. There's a lot happening, and I don't want us to sort of, forget something. And I also don't, as I said last week, and, as people have said about stabilization, I think it's very important that we can do what we can to try to make sure that people have jobs. I think that's very important to me, and I want to make sure that happens. And I agree with Dan that capital is important to invest in, but I also don't want to invest in capital at the expense of someone's livelihood. And I realize that, it might be picking things apart a little bit too much, but I want us to be thinking about everything on the table, and if we want to take it off, fine. But I'm sure I think we need to make sure we're making good decisions about everything that's out there, to make sure that we're not leaving something out that could help a little bit.
Yeah, and I agree, Ben. And just to be clear, okay, I'll get to you in a second, Sue. Just to be clear, I do not want to discuss the remedies tonight. What I'm trying to decide, what I think Dan is pointing towards, is not kind of so much how the remedy is, but what is the actual bottom line deficit, right? So we're talking about. So you're right. I don't want to go down that road, because I think what we're going to have to do is decide what do we think it is, and then we're going to have to go think about it and crunch some of these numbers on our own. We're not going to be able to do it in real time tonight to say, okay, this is how we close that hole. But I think what we want to walk out of here tonight with is, do we agree on the set of assumptions and roughly how big the problem might be? So,
fair enough. So related to that, I'll be quick, I promise.
Okay.
Is that I think, certainly the federal government has had discussions about possibly giving some money to states. Don't know what that looks like, and it could be municipalities as well. We don't know what that looks like. It might give zero, I know. But I think one of the hard parts of trying to make a lot of these, try to figure this out, is it is early. And this might seriously impact FY20 and not 21 quite impact, or it might be reversed. I don't know. Who knows? We don't really know where we are. And I think it's tricky it's a moving target. So that's all. Thank you.
Just Michelle here.
Okay. Yep, go ahead.
The federal government promised small businesses money within 1 to 3 weeks, and now they're saying they don't know if we'll get it at all. So just my 2 cents. So.
Yeah. Have you, just as a side note, Michelle, have you tried the process? Like, I hear all the problems they're having.
Yeah. Oh, I've applied for both. The other loan, the portal closed on Friday. It's reopening tomorrow morning. The SBA loan, I applied the first day. Haven't heard anything. They just keep saying 1 to 3 weeks, and they've been saying that for 3 weeks.
Okay.
So.
Okay. I was just curious. Okay, Sue, I think you had something.
Yeah, I just wanted to follow up on what Ben was saying, because I sort of agree around job protection.
Mm-hmm.
To me, is really very important. People's livelihoods in this environment. I worry about that. So I do think that, I know we're not going to discuss it tonight, but as we sort of start to think, I do think we should keep all options on the table, or at least consider them. That being said, I am not, I just would ask that all of the departments are looking at what their true critical spend needs are first, and pull out anything that may not be critical, that maybe could be pushed, deferred, etc. And again, with the capital, I think it's really important that we're only looking at what those critical items are currently, and then at that point we go back to the table and say, okay, let's look at all that we have.
Yeah,
So it needs to be, everything needs to be sort of, I think that each of the departments need to go back sort of to look and see what they can push out to perhaps the fall, perhaps next year, et cetera. And I think many are willing to do that. And then we can come back with a real number of what we're looking at.
And Ken, so Dan, I agree, and I just want to amend. I thought that we were sort of at a 1.2 million sort of hole to get us to the surplus and everything. But if we do have 250 in there for appropriations and only 100,000 of which is what I think is critical, then really we're probably closer to a million. And let's face it. We can tell the departments to go back and look at their spending and look at their everything. But by and large, it's all wages. And if we're already holding it flat within those numbers, there's really only one department that can that has built in some significant contractual obligations into their budget that is of size that would
make a dent,
help fill that gap.
Yeah.
What?
No, I said I was concurring. It would make a dent in that number.
Yeah, it would make a dent in the number, exactly.
Yeah. So okay, so back to the main topic, which is, what are other people's feelings on those assumptions about 5% local aid, 10% local revenues? Anybody have other opinions? Dan's clearly, we should be preparing for deeper cuts. What is the consensus among the other members?
This is Michelle. I would prefer to be conservative, and then come October, if we were too conservative, can always readjust.
So would you prefer to go? Dan's suggesting we go to like a 10% local aid cut. Do we want to move to that?
I mean, as long as we're doing it without having layoffs or anything major.
Well, as I said, at this point, we'll put this all in the model. We'll see where we are, and then we'll talk about how do we get to that point, right?
Right.
I think we should start there. It's better to start more conservative and see, and we can obviously adjust it as we move forward, as we hear more. But I think Dan's right. I mean, people, there's takeout, but that's ratcheted way back. There's, people, except in the town of Holliston, most people aren't out driving all over the place. And so the, gas side, like all of the normal sort of course of our lives has really stalled. And so I think there's going to be a big hit. I really do.
Yeah.
I'm worried. I think I would rather start conservative and go up.
Okay. Well, the real question is, how long does it stop, right? I think that's the question none of us have an answer to, right? So
yeah. Well, and then what comes back, right? There are going to be some businesses that just can't make it.
Yep.
Right. So there are going to be people who are going to stay out of work for longer periods of time. So it's not going to be a light switch you turn back on and everybody goes back to work.
Yeah.
Right.
So okay. So I guess I'll do a 10% reduction. So what about local receipts? As I said, if you look at local receipts, the reason I took that down 10% is because, and Sharon made a good point actually when we were talking earlier today, but I said I took it down 10% because I knew that the bulk of that, about 2/3 or so of that number, is the excise tax. And obviously there's a natural slightly downward bias to that because the excise tax drops as your car gets older until it hits a floor. But Sharon correctly pointed out today, she said, not that she expects to see a big jump in excise tax, but she said, the car dealers, because of this, are pushing new cars with all sorts of deals. So she said it wouldn't surprise her at all if we didn't see any impact to the excise tax because, to the extent that people can afford to do it, a lot of people are buying cars because it's a great time to buy cars in this downturn. So
you have to have a job to get a loan to
yeah.
buy a car?
No, that's why I said you have to have a job. Obviously, the conditions have to be right. But the point is, if there's some, if we're sitting there saying, okay, nobody's going to do anything, and so the excise tax revenue is going to go down by some amount, right? That may not be completely true. What?
car sales are basically flatlined right now because no one can actually go out and buy cars. And there are ways of doing it online and everything, but everyone wants to test drive the car that they.
Yeah. So the 10%. Yeah, go ahead.
Can I just chime in? Can
Yes.
we get more detail about what goes into local? Like, do they know what makes up a new car versus somebody has a car? So then we can do some stress testing and saying, oh, well, if this goes to market and people are out of jobs,
Well,
I think the excise tax is going to go down this much because not everybody's going to buy new cars. So maybe we look at what happened in 08 or 09 and see what happened there.
Yeah. Well, the one thing I will tell you, again, I can look up the numbers and bring those for next week, but I'll tell you this. The excise tax, the problem with our visibility in the excise tax is that we're not the RMV, and the RMV doesn't give us the data. So, for example, you go out and buy a new car, it's not the RMV. The way it works with the excise tax is the RMV does the run of the tax. They determine the taxes, and then they send this database to the town in like January or something that goes to our bill processor and it gets billed. So we don't really have any day-to-day insight into the excise tax. And that's one of the problems, right? The RMV doesn't give us, they don't sit there and send monthly reports saying, hey, guess what? There were 75 new cars in Holliston purchased and 75 taken off the road, right? They just give us this lump database every January. And that's why when we model it, we tend to be a little bit conservative because we have no idea from year to year what car activity looks like until we get that database.
Okay.
Now the other components, there is I'm going to see if I can find it while we're talking, so somebody can talk about something else. But there is. A long time ago, I sent it to the committee where there was a breakdown of what goes into that number. But I'm trying to. I don't know if I may not be. As I said, it's not going to be that easy for me to find. But there are the obvious things. This excise tax is the biggest piece. There are things like, permit fees, all the fees we charge for everything in town, right? Permit fees. The things like there are certain Medicaid reimbursements the town gets. That's a very small number. As I said, let me see if I can find it. We can move on, and I'll see if I can find it while we're talking here. So, do you have anything else you want to add, Vin? What are your thoughts on the local aid and the 10%?
I think local aid we should reduce. Like everybody's in agreement. I think everything's going to be hurt. Local receipts. I'd like to see where we were in 08 to get a sense because that was horrible. And I'm sure car sales. I think Sharon's looking at the pie in the sky, saying, "Oh yeah, everything's going to be there." I can't see it. If people are off jobs, nobody's buying anything at this moment because nobody can go anywhere. So forget this quarter, and then probably, I'm guessing, who knows what's going to happen. But I think, like, everybody's concerned with the economy, and I think I'm in the same boat. I think so. 10% could be, but I'd like to see more detail, and maybe it's even worse.
Okay. Okay, hold on. Let me. I'm just trying to see if I can find. The thing is, I don't have.
Ken.
Yeah, go ahead.
And this is Ben. I think I actually have what you're talking about.
Yep.
I asked Sharon about something like a year.
Yep. I found it. I've got the list here. So go. Yeah.
Okay. So all right, you send it then. Never mind.
Yeah. So I'll just tell you, Vin, and for anybody who wants to know, you have it because it was sent out a while ago. But the components are the excise tax, which, as I said, it's by far the biggest chunk, right? There's penalties and interest for various bills being late. There's the local meals tax, which we don't charge, so that's zero. Payments in lieu of taxes, which those are very small amounts related to some of the solar plants. Those are typically on the order of the last actual for 2019 was $42,000 for that. Trash stickers, which are run around 50 to 60 grand per year. Fees, which are the building permit fees, things like that. Oh, actually, no, that's a different type of fee. That's those are fees. Let me see what she has there. Well, there's ambulance fees. That's a separate entry. Rentals, which is town hall rental, things like that. Licenses and permits.
Going down to nothing.
Yeah, which is good. Which is at zero right now. Licenses and permits, which is that's the second highest amount. That's mostly building permits, right? That was in 2019, in FY19, that was about $500,000. That was about 1/5 of the excise tax. Okay, fines and forfeits, investment income, miscellaneous Medicare reimbursements, which again are tiny, and then what she has miscellaneous revenue, which covers things generally like marijuana. The receipts for the marijuana growing facilities and things like that. So. But as I said, by far about just based on FY19, it's about 60% of that local revenue is the excise tax, and so another 10 or 15% is the building permit fees. So that covers about 3/4 of the 11. Those two items cover about 3/4 of the total. So certainly we'll revisit that. And by the way, just to be fair to Sharon, right? She didn't say that she expected no impact. She was just saying that with the car dealers suffering and pushing models, that you might see some people buying cars that might offset it. She wasn't expecting an uptick, but she said it might not be as bad if people who can afford to are buying new cars because of the downturn. So okay, so do we think so on that point? Do we think that 10% on local revenue is a good starting point?
This is Michelle. I think it is.
Sue, I agree.
Okay.
This is Ben. I agree.
Okay.
I agree. Ben here.
Okay. Okay. So I'll update it to cut the local aid 10%, leave local revenue at minus 10%, update the school number to the currently voted number, and then we'll see where we are, and we'll go from there. So. Okay, and then what I would suggest is once I send it out, which I'll try to do, depends on how early we went tonight as to whether I'll get it done tonight. If I don't get it done tonight, it probably won't be done until tomorrow night. But I'll send it out. But I would strongly encourage everybody to look at it and start thinking about the next step, which is what the areas of discussion we want to have are in terms of, to Ben's point about everything should be on the table. Well, let's get everybody look at it and decide what they want to be on the table in terms of these discussions. There is one other thing I want to add before we move on, related to this whole process. The state, I mentioned last week that the state was going to try to reconvene the Council on Elders, so to speak, to update the revenue numbers. I think that's going to be a very helpful data point to have because we'll be able to compare what they said in December to what they're saying now as their understanding of where the numbers might be headed. I think that'll give us a little insight into where we might expect the state budget to go. That was supposed to happen this morning, but they had technical difficulties, so that call was postponed. So I'd hope to come in today and say this is where the state's their new revenue projection is, but we don't have that yet. So hopefully if that happens in the near future, which it's supposed to, we'll at least get our first inkling of what the state's thinking. I will point out as a couple of side notes, lottery revenue is down to the point where both Powerball and Mega Millions, in case you haven't been paying attention, have modified their rules to prevent growth, to limit growth of the jackpot to be commensurate with sales because sales are down so much. So if somebody wins Powerball, the next pot won't reset to whatever. I think the default is like 40 million. It's going to reset to like 20 million because the revenues are not there to support, or at this point are not there to support because everybody's locked down. So you can expect that lottery revenue obviously is going to be hit as well. The other thing I was going to say was, and again, this is not an agenda topic for tonight, but just to give you a preview of where we're going to be going. As we get further down, certainly not in the month of April, but as we get into May, if it looks like things are not easing up, or if it looks like town meeting will have to be postponed again, then I think what we're going to want to do in May, probably starting about mid-May, late May, is start drafting proposed short-term, essentially continuing resolution budgets to give to the select board to guide them, because if we go into FY21 without a town meeting approved budget, that's the process that the new bill states, is that we have to go on essentially a month-to-month basis type of thing. And I think it would be, while the select board has the authority to pass a budget on their own, I think it would be wise for them and wise for us to give them a starting point and say this is where we think the budget should go during that time. We're not there yet, so don't worry about that. But I just want to let you know that's going to be on the horizon if this doesn't let up in a reasonable time frame. Okay, does anybody have anything else they want to say about the model? Okay, then what I would say is one other item before we move on to our executive session, which is I did officially receive the resignation of our recording secretary, and it was sent to Mary. So we are now, I'm working with Mary to post for a replacement. I've been told that at the moment all postings are on hold because of this. So, in line with the whole idea of the spending freeze. So one of the things I am hoping to do, hopefully by next Tuesday, certainly if not by next Tuesday, by the following Tuesday, is I brought this up earlier, and now that we're all home, it might be a good time to do this, to divide and conquer on our outstanding minutes. So we'll do that, have everybody take a few meetings, and then draft minutes for all these, so we can catch up, and then we'll deal with the, a new secretary going forward. So, okay. Anybody have any comment on that? Okay, then I think, and does anybody have anything else they wish to bring up in open session tonight? If not, then I will entertain a motion to enter executive session for the purpose of discussing strategy with respect to collective bargaining arrangements.
Moved by Mr. Alfred.
Okay.
Do we have to say that we won't be?
From which we, correct, thank you, Michelle, from which we will not be returning to open session.
Mr. Maxwell.
Okay. Okay, that requires a roll call vote. So just give me a second here. I'm just making notes here. Okay, the roll call. Let's go down the line. Let me pull up my little thing here so I make sure I get everybody. Okay, Mr. Alfred?
Affirmative.
Okay. Mr. Sparrow?
Yes.
Mr. Maxwell?
Yes.
Ms. Zemer?
Yes.
Ms. Nersessian?
Yes.
And Mr. Shada, yes. Therefore, we are now going to enter executive
You
session.
didn't ask me.
Oh, that's right. Well, that's because you scrolled off the bottom of the Zoom. Mr. Murphy.
Yes.
Okay, sorry about that, Vin. As I said, you scrolled off the bottom of the Zoom meeting. So that will conclude, and before the members, you know what we have to do to move into executive session in the virtual meeting. But let me wrap up the public session by saying to the folks at home, this concludes the public portion of the Tuesday, April 7th meeting of the Finance Committee. Thank you for joining us this evening. We will likely be meeting next Tuesday at the same time, again virtually. But for tonight, we're finished. So as I say every week during this crisis, make sure you're washing your hands. Stay safe, everybody, and we will see you next week.